Thank you everybody for joining us at Pensions Awareness Week for the early years sector. You've made the first step in which can be a hard decision to make in business, which is actually tuning in here today to see what's involved in pensions and the other options that we have in business for making arrangements for, I suppose, our financial health in later life. My name's Alec Flood. I'm from Little Rainbows Creche on the north side of Dublin, Dublin 13. With my wife Monica and myself, we have 4 creches in Sutton, Donamead, Baldoyle, and we're just actually opening a new service in Balmain later this year. So in relation to this webinar today and Pensions Awareness Week, the objectives that we're going to be looking at is how to maximise business benefits for yourselves and also how to manage pensions efficiently. We're working on the understanding that you're all very busy this time of year. It's September. Not only are we dealing with a return to the classrooms, but we're also dealing with the pressures of COVID-19 and trying to operate our services in a safe manner. So most people don't have the time to be thinking of putting aside measures and make financial well-being for later in life. They're too busy, simply too busy. So what I've been joined here today with is a number of panellists, both from the early years sector and from the financial world, from just here in the building and also remotely. So I'd like to introduce Dara Whelan from Childhood Services Ireland. Dara has been the first director to set up an employer's representative group within the early years sector, and many of you would know him for the work he's done on behalf of early years and IBEC. I've also got Regina Bushell, who many of you know from Groveland's childcare in the Midlands. She's got several services, but she also moonlights by being the chair of SASHUS, and she speaks often representing providers and their issues. We've Blonnie Henderson from moneycube.ie, and she's going to be filling us in on basically what we should be thinking of when we consider pensions. I'm also joined remotely by Ronan O'Neill from Zurich, and hopefully we won't have any technical issues and everything will run smoothly. So just in terms of my own dealings with pensions, I'm looking in that, I worked in other professions, and so therefore I was introduced to a pension very early on by my first employer. But since meeting my wife and actually being married now for nearly 20 years, it's always amazed me at her resistance to setting up a pension. She's always been too busy. She's always put her business first. She's always put childcare first. She's always put her staff first. She's never actually thought about herself. And so over the years, I've been trying to persuade her to start thinking along the lines of her own financial well-being. And last year, during lockdown, we were deciding to expand the services. We'd set up a service in Baldoyle, and we were considering setting up in Balmain at that time. We realised the importance of staff retention and looking after key members of our staff. And that's why we then looked at pensions for our managers and supervisors, and it was that stage then that I managed to encourage her. So looking at it from your own perspective and from the perspective of the panellists then, I'd probably go to Dara first as employer's representative. Just to Dara, can you give us an overview of, a high-level overview of the changes in the sector, or where the sector is currently at? In terms of, we hear lots of proposals by government and stuff. So what do you see as happening out there?
Yeah, certainly, Alec. So we are right in the middle of some of the largest reforms that the sector has ever seen, particularly in relation to the ongoing professionalisation of the sector in terms of the workforce, the career framework, but also in terms of how the sector is going to be funded and how that the budget will fund this particular sector through the Department of Children. Focusing on the workforce development side of things, the ongoing strive towards professionalisation. Of course, this conversation has to go hand in hand with the conversation we're having today about pensions. So you can't talk about professionalisation if you're not going to be talking about pensions at the same time. I mean, it's a hallmark of a professionalised sector, if I could say. So some of the issues that we are facing in terms of workforce development is staffing concerns. And I think Regina, yourself, Alec, would agree staffing has always been a complicated factor within the sector. There's always been a drive towards a graduate-led workforce and higher levels of qualifications, which means that the pool of candidates is often somewhat smaller. As well, terms and conditions and pay has been a relevant topic over the last number of months. If we were to transport ourselves back to February of 2020, there was a protest and march on the streets of Dublin talking about the terms and conditions and the wages within the sector. So all of these efforts have to go hand in hand with what we're talking about pensions. So what we do know is that the JLC will, for the earlier sector, will be established in the coming weeks, which will be a mechanism for addressing terms and conditions. But it may not go into the territory of pensions. So this is something that employers are going to have to take the initiative of themselves. So we have this dichotomy emerging between the need to professionalise and have better terms and conditions, but also at the same time the need to keep childcare affordable for the parents. And any time that there's a cost incurred by the provider, whether that be for increasing wages or overheads, then that means there's going to be a cost to the parent. And sometimes it results in higher parental fees, which is an undesirable but an absolute necessary outcome. So we always have to balance these two hand in hand, and it's always a cost-benefit examination of these matters. So when it comes down to pension, what I do believe, anecdotally from speaking with individuals in the sector, is that there's perhaps a lack of knowledge in terms of what the benefit a pension scheme might actually provide. I think we focus a lot of our energies on improving terms and conditions and the baseline wages, but at the end of the day, that's not what's going to keep retention within the sector. We have to look further afield and look at areas such as pension schemes as well to hopefully retain staff within the sector. Prior to COVID, I know COVID has changed things dramatically, but the retention rates in the sector were over 20%. So there's 20% of staff leaving services, but also leaving the sector altogether. Now we can look at the reasons as to why this may have occurred. There's a heavy reliance on international staff, for example. So they will come in, they'll get trained up, and then they will move on. There are staff that are qualified, will start working in the sector, but due to the wages, they'll actually leave the sector altogether. So there's a plethora of issues, and there is no one panacea to resolve these. But if we were to look at pension schemes, this is one area that will hopefully make it a longer career progression. And within the workforce development model, the career framework, which will have stepwise levels of roles with extra qualifications and experience, if that goes hand in hand with the pension, this should move in the right direction to resolve some retention issues. With the EWSS, it's been a blessing and a curse at the same time. So, of course, the sector has only been viable because of the availability of the EWSS for services, but it has also necessitated, due to the play pods and public health measures, an increase in staffing levels for certain services. So that has actually taken out the surplus of staff that would normally be dispersed across a greater variety of sectors. So staffing is today going to be an issue, and it will still be an issue in 6 months' time. So we have to start thinking outside of the box as to how we can retain those staff, and not even retain who's in there, but attract people into the sector who are not currently there.
And Regina, Dara has mentioned professionalisation. Could you give us an insight into what you think, like on the ground or in the services themselves, how things have changed in terms of careers for staff?
Well, I suppose you're looking at me, I'm over 40 years in it, and I started at home in my own house with 10 children and have grown that over the years to 6 services with 125 staff. With over 700 children attending services. In that time, when you started years back, all you needed to do was be a mother yourself. That was, if you're talking about 40 odd years ago, that's the way it was. And we look at how we've come from there to where we are now. For me, I think this is a very exciting time. As Dara mentioned there, we are in a huge transition. And that transition is very positive for children, it's very positive for staff. It's very positive for parents, and particularly for parents who are relying on us to provide services while they work and safe services while they work during the day. We have gone from no qualifications to, in 2016, having a qualification at level 5. That was the requirement. We are now looking at a huge increase in graduates over the last number of years. and more emphasis on, I suppose, the training that those staff get, and the requirements have changed as well. Like from the start of the ECCE scheme 12 years ago, I think now, the sector has changed completely from what it was. The Department of Children got involved at that stage. Fees changed, what we were charging our parents changed, and it was a challenge for us all. It has been, the ECCE scheme has been so successful. Over, I think, 90% of children in the ages of 2 years, 8 months to 5 years attend some ECCE session during the morning, during the 10 months that it goes on for. So that has been hugely successful. And then, of course, pressure came on from the whole thing of the National Childcare Scheme for affordability for parents, and that was really very important. So if we have government money coming in, at one side, they are going to want to ensure that quality and value for money was there as well, and they are accountable for the money that they're putting in. So the whole thing of qualifications, of course, gets looked at. So at the moment, there are enormous load of discussions that have taken place on a career framework and a career pathway, so that when people come into the sector, they're not going to leave it as not a revolving door, that there is a pathway there for them, that they'll come in maybe as at a level 5, that there will be a career pathway for them, and that CPD will be provided for them to upskill to level 6, to go on to do, obviously students coming out of secondary school are being encouraged to go in and take on a degree. But with all of those things that are really positive comes the whole thing of how is this going to be paid for. So that is a challenge. And retaining the staff and looking at pay and conditions is so important for everything that we're doing in the sector right now. So if we're going to have graduates coming in, they need to be able to see where they're going to go. So we're looking at trying to develop centre leaders within centres, look at pedagogical leaders, look at different roles of responsibilities where staff may get paid more. It's also looking at outside of they'll go on to be supervisors and go on to be managers, and looking at how all that's going to happen, and also look at the fact that we have sector partners. There's Pobble, there's Better Start, there's Tuslow, there's the department itself, all of who are involved in what we're doing on a daily basis, and there are other jobs there as well. But we are we're in a major transition period, and retaining those staff and retaining the expertise that's built up a number of years comes back to the pay and conditions. We want to keep those people in the sector, and to keep them, there are only 2 ways that we can keep them, and that is additional investment from the government or additional fees by parents. And I think most of us realise at this stage that parents are actually capped out. Where pensions are concerned, I think that the whole thing of, as Alex said about his wife, I wouldn't have thought of pensions for myself. I always put the centres first. I always put my staff first. The needs of the children came first. My own needs came last. I think where younger staff are concerned, they don't see to the future. They're thinking in the here and now. They want as much money as they can have in their wage packet going home. There is some confusion around what happens if they move from one centre to another. Can their pensions go with them? There needs to be a change of mindset around providers, in my opinion, and I'm talking from my own experience, need to start looking at their own futures. What will happen when it comes to retirement in 10 years' time? How they are going to, I suppose, provide for themselves for the future. Staff need to start thinking around it, and from my own experience, my higher paid staff and my more mature staff in the past, they were very willing to look at pensions and putting pensions in place, but my younger staff were not. So there's a mindset change required to look at, to the future, to see how they're going to provide for themselves. And I think that the opportunity to do this during Pension Awareness Week is going to be really beneficial for them.
Yeah. Okay, and Regina, you've said, look, you've been in early years for a large part of your life, and you're a large employer in the Midlands, and you know, it sounds like you've successfully grown from a small sole trader into a sustainable business. But from the point of view of, you know, managing the difficulties, like you say, that some providers now and as self-employed people, of balancing, you know, making that financial commitment to put money aside for a pension or for later years, or for looking at you know, the time required in researching this and kind of looking into it. What would you think, you know, is there anything different from in terms of early years to others, or you know, I know you deal with the Chamber of Commerce and stuff like that, but have we dealing with same problems as other sectors? Or are we any different? I mean, sometimes in the earlier sector we like to say we are different and we should be, you know, treated but are we really when it comes to this financial aspects?
I'd say that there are other sectors out there who are struggling with introducing pensions the same way that we are. It's something that really wasn't talked about a lot. I mean, I think it would be, or will it? I know I've heard that they, on the grapevine, that, you know, everybody who's an employee may have to have a pension in the future, that once they become employed, that they start a pension and that pension follows them. I think that from our point of view as a sector, I think people talk about us being different because of the amount of regulation and legislation we have to cope with. A lot of other sectors don't have to cope with that, and it is costly. So like every time you do something else, it's costing more. So then pensions get further pushed down the line. Am I answering your question, Alex?
Yeah, no.
Is that...
No, well, as you rightly point out, that because of the regulations, we're kind of constantly chasing our tails in early years. We never know when the next knock on our door in terms of inspection from TUSLA, from Pobal, and people don't take their eye off the ball and maybe don't commit the time it takes to investigate pensions and stuff like that. So maybe we are a little bit different in that we don't have that time out. Like I know at the weekends I generally be in doing the maintenance and whatever. So it's not, childcare is not really a 5-day week job. It's a 7-day commitment, and it's a vocation for some people.
And now you hit a nail on the head, and what would I say, a thing that I have loved to talk about at times, and that is the number of hours providers put in. Because we do. It is not a 9-to-5 job. It's more like a 6:30 to a 12:30 job, and sometimes 2 or 3 o'clock in the morning, depending on what's going on. And I know sometimes they talk about nationalisation, Dara, I mentioned the word, and if we were to be replaced, I think you'd need 10 times the amount of people there because of the amount of work providers have to do after hours. Mm-hmm. There's a huge amount of work that providers have to do and their staff have to do in order to meet the legislation and requirements. And the fact that we're inspected all the time on those does put pressure on. There's not in other areas. Yes, there's regulation in other areas. Obviously in hospitality have to meet the HACCP rules and all of those sort of things. But when you look at everything that we have to actually provide, it has grown year on year on year. Providers feel totally overwhelmed of the number of inspections that we have. But I want to look at the positives as well too. There are so many things that are so positive in our sector at the moment. The fact that the department are looking at the things that they are looking at, that I and other people in the sector for a number of years have been trying to get us to work towards. And first thing would be the recognition of the work that we had done. And some people say it has taken the pandemic to recognise the importance of early years care and education in the sector, how important we are to people who are working. The fact that we're there for people who need to go to work every day, they can rely on us to be there and provide quality services for their children. How we talk about ourselves sometimes is not good enough. We need to be getting out there and saying all of the good things. I mean, the feedback providers all over this country get from their parents and carers of the children that they're looking after is phenomenal. Like, we do a really good job every single day. The providers do and their staff do. And it needs to be, it is being recognised. For me, that is really, really important, that recognition continues. The partnership with government continues. That trust, and that we build that partnership and we build a trust between us and the department. And it's a two-way thing. It has to be a two-way thing. I think that's really, really important. And, I think with everything, the most important thing, and all of the regulations and everything that we're asked to do, the most important thing for our staff and for us as providers is to keep the eye on the ball, and the ball is the child. If we're looking after the child and keeping to what is important for those children every day, we won't go wrong. But the department needs to realise as well that the most important thing is the children in our care, and they need to look at this overwhelming that goes on in centres, that for the amount of paperwork. And I do know they're looking at that and that they're listening to what's been said. But look, we do a really good job every day. We need to make that heard more than it is.
Yeah, that's a very good point. Dara, you wanted to come in there at the beginning. Is there anything like, I know IBEC has lots of other trade associations. If we were to encourage the early years sector to look at pensions specifically, have you anything to add to that?
I certainly do. So the earlier sector is absolutely different to any other sectors that you could encounter, albeit it is an entirely private sector, so you'd assume that pensions would be part of the parcel there. It is unique because funding and state funding plays a significant role within this sector, but it works in different ways depending on the type of service that a provider may have. So the ECHI programme is wholly mainly funded by state investment, whereas full day care can rely on parental fees to an extent. But either way, the word cost to a provider always sends shivers down their spine, because either an ECHI provider would have to absorb that cost themselves because the state funding is set, it's going to be the same year on, year out, and any increased cost is just taking away from their income. Whereas a full daycare provider might be in the situation where they would have to increase parental fees, which is an undesirable, but again a necessary outcome on occasion. So their approach to finances, albeit different, they still have a similar mind frame, in that cost is an issue no matter what happens here. So hopefully from the session today, when we do speak to the rest of the panellists, that we can somewhat demystify the cost benefit for providers in the long run. So not to be afraid by cost if you are an ECHI provider and you're covering the income yourselves, and look at it more as the investment and how that has the long-term benefit on that.
Okay. So Bláthnaí, thank you for being so patient. You can see the passion that exists in the early years sector. Could you, from your experience of other sectors, put the earlier sector in kind of context, and before we get into the options that may be available to us, is there anything we've missed that we should be thinking of in terms of our financial well-being?
Yeah, certainly. So just to kind of comment on what Regina was saying about the value of the roles in the earlier sector. I have one child who's started primary school, who's come out of ECHI, and the other child now starting ECHI. And I know I highly regard the role that the earlier sector has played in my children's first learning experience outside of the family home. And one of the things that I feel would place value on those roles and make the industry an attractive one for people who are passionate about early years is placing a value on the role by, future guarding people or safeguarding people's financial future with the likes of a pension. And I suppose that kind of comes from, people in more senior positions down. So, the people running the early years sector, the creches, etc., they need to lead by example and look after themselves and safeguard their financial future by, putting in place that pension provision. And the options, it's not the way that it used to be. Pensions are very accessible now. Costs are certainly more visible and transparent. And certainly options they're much more flexible. There's options to increase, pause, decrease. And in terms of an investment, you have multiple options around that as well. And then you also have people like MoneyCube or Zurich who can really help that administration as simple and seamless as possible. But I certainly believe that places value on the roles in the earlier sector and promotes retention. You know, children, or sorry, not children, but the likes of Leaving Cert students now who have that passion, and one of the attractive things to be in that role would be the commitment from employers that they are going to give such financial benefits. And these pensions don't have to be set up with, you know, high cost. The charges can be as low as, you know, we can get them. MoneyCube can help you find products that are low. We go through those with you. And in terms of contributions, the thing is to make a start, to encourage your employees and encourage yourself, and you know, make a start, make a bit of an employer contribution, but that is, it can be small, you know.
Okay.
Have you anything, Ronan?
Ronan, do you want to come in on that point?
Yeah, in fairness, it's a very interesting conversation you're all having, and I wish I worked in an industry that wasn't considered so boring, because finding the time, particularly yourself, Regina, you're talking about you're spending all your time working and planning for the children you look after and planning for your business. But if the pension world was that little bit more engaging, a little bit more exciting, you might find an hour to be able to look after your own future, because really and truly, you'll end up getting to retirement age and wishing you had found the hour or two to invest in your own future. And it is imperative that you do so. We've carried out research in the marketplace, and generally people over the age of 50, the one regret they have is they didn't find the time to consider their own retirement needs 20 years previously. So when they were 20, when they were 30, and looking to save for the retirement then. So I see there's two things here. There's yourselves as employers. So Alex and Regina, you're both business owners. So you've got a dual role. You've got to look after yourselves, but you also got to look after your employees. And if you do have quite a young force, it's trying to find a way to engage them early and get them bought into their own future and bought into their own need for buying a pension. And I think that when you're looking at the professionalism of your industry, having additional employee benefits as a supplement to salary, I think is a really, really strong way of building out that particular role. And when you speak to people like MoneyCube or ourselves or other financial advisors, they're there to do all the heavy lifting for yourself. So it shouldn't be incumbent on yourselves to have to educate your employees. You can rely on other people to do it. Do you know, in the same way that you rely on an electrician to fix your light bulb or a plumber to fix your plumbing, you can rely on other experts to help educate your employees into the need for funding for their own retirement. And as Bonnie was talking about, there's some very cost-effective ways of doing it that reduce the cost to yourselves as employers, but it's still making it attractive for the employee. And you can find ways that make it conditional that if the employee decides to contribute to their pension, then you might be in a position to top it up as well. But if an employee doesn't want to contribute, then there's zero cost to you as the employer. So there's lots of different ways of finding the funding to enable you to pay for your employees' pension, but also finding ways to encourage employees to contribute yourselves. But I can't stress how important it is for yourselves as business owners to really look at your own futures and to look at retirement planning, not just as funding for your retirement, but as a business owner, you can also look at ways of making it a very tax efficient way to fund for it, so you can make it work for your business as well.
Mm-hmm. Okay, Ronan, before we come to that point of the tax efficiencies, I know myself when I was introducing my wife and her staff to pensions, we approached our accountant and he referred us to a financial advisor, and that's the route we went down to. But I know there's a high street bank at the moment that Baz says that mentioned the F word and to his mother, and we talk about it. And as business owners, we don't like talking about the finances, about profits, and about the fact that many people's vocation has now turned into a business. But the reality, Bonnie, as you know, is this is what you deal with on an everyday basis. So from that point of view, could you outline specifically what Ronan touched upon, and I'll ask Ronan to contribute, maybe on the business benefits side, and also the personal benefits side, and what providers should be thinking about if they're moving down that route?
Yeah, absolutely. I suppose first and foremost on the tax relief side of things, employers can claim tax relief of corporation tax on contributions that they make into a pension scheme. Also, contributions going into the scheme are going in tax-free. So in a way, you're kind of saving on PAYE, USE and PRSI. So they're the taxation benefits for the employer. That's an occupational pension scheme. There is another option of a PRSA product, which would incur benefit in kind charge, but not income tax to the employee. So there's two different avenues that employers can take to set up these structures to put pension provisions in place, and there are tax benefits to, claiming your tax relief on your corporation tax back. So it's not all cost to the employer. There is relief there, providing that attraction to provide these benefits to the employees. In terms of personal benefits, we touched on retention. So it's retention of key staff, and I suppose it's attractive then. It makes the industry an attractive one for anybody who has that passion for childcare or for early years, but might be put off because maybe there isn't that progression or that certainty of financial well-being they feel.
Can I ask a question on that there? From the point of view of retention, or even from staff moving to try and get them to do it, we know that sometimes people get married and they move, or they become pregnant and then they're out on maternity leave, and I know some of the questions around that, and maybe it's something that you'll answer during your workshops during that week. But what happens when somebody wants to move on? Does their pension go with them?
Of course.
And those type of questions. And I know for us, Ronan mentioned it there, like taking the work out of it. One of the things I was speaking to providers about it was the administration side of things. And I know that when we were doing our pensions recently, and whatever, actually we're with Zurich, somebody came and they set up all the appointments with our staff, so it took an awful lot of my senior management time out of it, which was really, really great. They came in, they made time to talk to each of them, anybody who was interested met with them, and then that for us was, as employers, was beneficial, because it meant I wasn't giving up of my time, or one of my senior managers wasn't giving up the time doing it. So like those type of things are helpful, because sometimes you hear like that there is challenges there in the administration side of it from providers, and particularly I'm no expert on pensions. I do know about it. My husband was very involved in his work with pensions, so I know a bit about them, but I wouldn't be an expert. So I would have always sort of said, if you want expertise in something, talk to somebody who is.
Exactly.
And then you'll be put right.
Yeah, exactly. Like Ronan mentioned, you hire an electrician, or maybe even, hire people for HR advice, or your accountant. It's no different when it comes to pensions. It's leave it to the experts, and you don't have to worry about taking on that burden as well.
And Ronan and Bloney, Regina has touched upon it there, that that the practicalities of arranging it, and okay, there hasn't been that many positives that have come out of COVID, but if there was one, it might be this remote working. So from your guys' point of view, do you do like Zoom calls to arrange pensions now, where you don't physically have to drive down to the Midlands or to Dublin 13 to do it? And have you become more flexible in accessibility?
In fairness, COVID had become a game changer in relation to engaging employees. Very early on, when COVID struck, we moved to remote meetings, and they became a godsend, particularly for engaging employers and employees. So what Regina talks about there, in terms of we would have come along and we would have met members and met potential employees wanting to consider to join the pension scheme, we were doing that all remotely. We were doing it as group sessions, or we were doing it as one-to-one. And it's proven really effective. And you actually find when you sit down with somebody and you talk to them about what they want to do when they come to retirement, and you give them the time to ask the questions they might think are a little silly or whatever. It's very simple to be able to explain to people how simple and how easy it is to understand a pension. You don't need to be an expert to take out a pension. So, all you need to do is to say, right, I'm going to commit to doing this every month. I'm going to pay a little bit of money into it. Taxman will give me a little bit back, and then I'll look at it maybe once a year, and just to make sure that everything is on track. And if you can commit to doing that maybe once a year, when you come to retire, you'll be thanking yourself. And I just think it's habit forming. It's about getting into that habit of doing it. And that's where ourselves or MoneyCube or other advisors would really look to do the heavy lifting with sectors such as the early years sector. We would there to support you to take all that heavy lifting as we go through it.
It's about that mindset, again, and I think that taking the employer out of it and bringing somebody, I know you're sort of saying, you don't have to be an expert or whatever, but bringing somebody else into it takes me as the employer out of it, and it's somebody else telling them this is a really good thing to do. I think that's important as well. That they realise that, and then that there's somebody else that they can talk to. They have that link with the person who's setting up their scheme for them, not necessarily maybe with us that they can talk to. I think that's very beneficial.
Yeah, of course. I find as well with the Zoom calls, particularly talking to individuals about joining pension schemes or setting up their own pensions, from a home setting rather than a formal meeting setting, I feel they're more open to talking about what their future financial requirements are, or maybe that more ideas come to mind when they're in that setting. So I found that the Zoom calls have been certainly beneficial.
Yeah, that's good, because I know from my experience, my 6 members of staff that we introduced to a pension all arranged it through Zoom calls on their half days, and so therefore it wasn't a commitment, or they did it in the workplace. They were more, I guess, comfortable talking, certainly to a third party, and it's not through the employer, even though we have an excellent relationship with them. But it is something that's personal platform to them, and it's good to have that privacy. So just then, Ronan, if I can move on then to the various different options, and I know Regina touched upon it there. You may have people with existing pensions, you may have people with international pensions, and just maybe people who are talking about postponing their retirement. Others people taking early retirement. How flexible are pension schemes, and are there other products that we should be considering also, such as in-service debt products like that, which again we don't want to contemplate, but they're necessary in our kind of life.
Well, if focusing on pensions initially, like pension products have become incredibly flexible. I suppose if you go back 20 years, they would have been relatively inflexible. They would have been a bit more complicated. They've now become far more straightforward, far more simple, far more portable. Because that's really the recognition that the job for life is sort of a bit old hat now, and people move from one employer to another, maybe every 5, 6, 7 years. And if they've built up a pension pot, they want to be in a position to be able to move that with ease. Pensions are now in a position that they're fully flexible. They'll enable you to do that. And if you decide not to move it, you can simply leave it sit in the background, working away in as you want. And you can simply start up a new pension as well with another employer. So you've got all that flexibility with regard to the individual. In relation to pensions abroad, many people have worked abroad. I've spent 10, 11 years in the UK. I have a couple of pensions over there. And I have looked at bringing those back to Ireland, and I will bring them back. It's just a little bit more complicated coming from the UK, depending on the type of contract. But for many pensions, you can bring them back. If you do have pensions in the UK, one piece of advice I would give you is make sure to contact your pension advisor in the UK and let them know your new Ireland address if you've only recently moved back, because you want to be getting your statements sent to you in Ireland so that they don't forget about you and that you can keep track of it. But there are pension products that allow you to move your pensions from the UK, from Australia, from the US back here to Ireland. And that's really important when it comes to retire, because what you don't want is lots of different pension accounts dotted around the globe. When you come to retire, you want everything almost in one pot so that you know exactly how much you have. It's the equivalent of having multiple bank accounts dotted around the country. or dotted around the world. You don't necessarily want that. You want everything in a single location. So there's certainly, there's ways and means of doing that. But again, I would always say, don't try to do it all on your own, because get advice. It's always the best way to do it. Get somebody to help you with it, and get somebody to get a bit of advice in relation to that. And then the last thing, Alex, was around other forms of products you might look at. Do you know, if you're in your 20s, and yes, you may want to take out a pension for your retirement, you may have more pressing issues. You may be looking to save for a house. So certainly you should be looking to have some money saved in the bank. You may be looking to taking out a savings plan with a pension provider that isn't necessarily linked to your retirement. So there are options in relation to that. Again, a good advisor will guide you in the best way to look at that. And if you're an early care sector provider and you're looking at staff retention, providing a pension is probably the number one thing to do. But you can then also look at other options, such as providing life insurance for your members, or providing income protection. So if you've got people off sick, then an insurance policy will kick in and it'll give you the money to pay for that person to be off sick. So there's different types of products out there, and you can look at different options depending on the categories of staff you want. So if you're looking to retain your top managers, or people who've been with you for a long time, you can offer them different incentives, such as providing life insurance, income protection, as well as a pension. So there's lots of things out there for you to look at.
Okay. And Blondie, just in relation to pensions specifically, and the financial, I suppose, commitment, is there any maximum, minimum amount? What should we look at a percentage of our income, or there's no such thing as a minimum once you start early enough, or is there any advice around that?
There are a few factors. So providers will have their minimum monthly contributions or single contributions, which are generally very affordable. They can be as low as I'm not sure, like 100 a month or so. So they'd be very affordable. In terms of, you would have to find what fits for you. There's tax relief benefits dependent on your age, so you can claim back, up to a certain percentage of your salary in tax relief, depending on your age. So that would be another factor for somebody who's contributing to consider. And then the other consideration then would be max funding. So the revenue will only let the individual fund for a certain level of pension. So they're the factors that you'd need to consider. But making a start is certainly the most important thing. Yeah.
And Regina, would you see, like we touched upon early on, that the financial commitment that people kind of, even though this is a vocation to some people, but they're maybe only just making a livelihood out of it. And then, there's larger providers with multiple services who might be working directly with the children, and it might be easier for them to make contributions. But what would you advise or suggest in terms of staff coming in their 20s and putting a small amount of their pensions away as a nest egg?
Well, I think that we should be encouraging all staff, the staff we have at present, those of them who haven't, even though they have been given information and whatever and haven't progressed it, that we should try and encourage them to do it. I think that, as I said earlier, it is a bit of a mindset change, that they're inclined to think in their early 20s and early 30s in the here and now. You're not thinking about another 20 years down the road. So they should definitely, raising their awareness about it, I think, is really, really important. And seeing how we can do that. I know that when the people came down to us to talk about pensions, we allowed our staff, we made sure every one of them that wanted to, we gave them time, we covered them, and I know that can be a nightmare for some people because of the staffing shortages at the moment, that it is difficult. But then to get to do it, maybe for whatever companies will come in to talk about it, that they're doing it at a time that actually suits the staff, maybe after work in the evening, and where you have big numbers of staff, that could take a couple of evenings, or maybe group meetings, like when things come back to whatever normal will be and people can get back in a room together again. that you'd be able to organise group sessions
like
around it. Yeah, I think that would work, just to raise awareness about it. I think, like, if you look at it, there are 4,500 providers out there. How many of them are actual sole traders and working on their own, maybe with one other person, and they haven't ever thought about actually starting a pension for themselves. And I think that, you know, trying to raise awareness around that, the importance about it, and I know some people will say, oh, maybe they can't afford it or whatever, but I think that's a mistake. I think they have to afford it, because they can't afford not to afford it for their own futures. That it would be really important to think about it, to talk to somebody that will advise them and get good advice on how they will go forward with it and how much they need to be putting aside to get them to 10 years down the road when they do actually retire. But it is an area, as Alex said earlier, and I think Dara said as well, the whole thing of pay and conditions is all linked up in how we're moving forward with our sector. And that, you know, the staff and us as providers need to look at how we're going to fund the pensions, contribute to the pensions, and in particular make the information available to our staff so that they can make a decision for themselves on it. Because it will be their own decision at the end of the day.
And I think one of the messages to providers or, you know, business owners or to staff is, you know, the earlier you start, the smaller those contributions could be. The later you leave it, the more obviously you need to put by. If you make a start now, you have time for your contributions to compound and grow and be invested tax-free, grown into that retirement pot. Whereas the later you leave it, you have less time to achieve that. You need bigger contributions to give yourself that income in retirement.
That's a really important point there, because I think a lot of staff would be deterred from starting a pension because they think they're only investing a small amount, so they don't see the point in it. But I mean, a small amount over a long period of time, it is a commitment over a long period of time, is a lot. And secondly, there is a lot of staff who are less inclined to open schemes as well, because if Ireland isn't their normal country or their home country of residence, then they don't believe that it'll follow them back home where they do choose to retire at some stage. But I mean, it is quite easy to repatriate those pensions as well. And providers themselves, I suppose, they need to make the pension schemes work for them and for their own retention needs. So we know, excluding wages, pensions are going to be the best thing to retain staff and keep staff happy. So they have to make a way for a pension scheme to work for them, whether there's conditions attached to it, whether the contributions kick in after a certain period, or if the employer contributions can only be retained if a staff member stays in the company for a concerted period of time. So they have to make it work for them, I think.
And I think Ronan mentioned a couple of other things there too. Again, like if you're looking at us as employers, from the point of view of other things that we may be able to look at offering to our staff, like, you know, insurance and income retention and all of that sort of thing, that is really, really important. There are other things, I suppose, that people will be interested in hearing about during that week. It would be sort of, obviously you have full-time staff and we have part-time staff, and it would be encouraging those part-time staff as well to make contributions, because a lot of them would be working, you know, they might work from say 8:30 to 1 or 2 o'clock in the day, and they're not full time, but again they mightn't see themselves as a pension sort of thing. So again, it's raising their awareness of the importance, as you say, the whole thing of putting in those regular small amounts that they all add up at the end, you know. So yeah, it's really important.
Okay, well actually time has gone quickly there, and we've covered all the topics that we wanted to cover. But I have a number of questions that were sent on that I'm going to put out there to the panel. So if I may firstly recap, certainly the 3 takeaway points that I'm getting from it is that, you know, we're well familiar in the early years sector how important you know, it is to it's never too early to learn. So what I'm taking away from this is, in relation to the financial sector and pensions, it's never too late to put aside, and also how important it is, and Ronan picked up on there, is to seek advice. Maybe, you know, you've already taken the first step, as I said, in listening into this broadcast, and maybe the second step would be to follow it up with seeking some advice. And plain and simple, like, in the earlier sector, we're educators and we're carers. Maybe it's important to take a little bit of time to educate ourselves on pensions and to care for ourselves in later life. I was listening to the radio with Tommy Bowe, the rugby player, was talking about how important it was, for rugby players to have a life after rugby. Well, as unconceivable as it might be, there'll be a life after early years, and we have to kind of start thinking about that now. So in relation to questions to the panel, and apologies for just throwing these out at you, but if I could maybe start off with Lonnie and Ronan to ask, is there anything you've learned from Regina and Dara, as a takeaway from this session as to what, inform you going forward and being able to provide a service to the early years, people who work specifically in early years?
Yeah. I suppose the main takeaway for me is that providers need to know that we can provide that service. We can do that hard work, come in, talk to your employees. We are there to support you like any outsourcing business that you use, and it doesn't have to be your commitment to time or extra funds on you in terms of bringing people in to teach your staff about pensions. We will do that for you, and then we keep the costs as minimal in setting up the pension, so we can cross that bridge when we come to it. But in terms of education, we can certainly come in and do that for providers.
And I'll ask the same question to Dara and Regina. What have you learned from Ronan and Blonnie in terms of, have you reassess your own services and your own staff and your own position, Regina and Dara, like next time you're talking to providers and they ring you for advice and direction, is there anything that you've learned today that will help you to give that advice?
Yeah, from my perspective, what I'm definitely hearing from Blonnie and Ronan is that there's no such thing as a small amount, because you were talking about the combined interest over a concerted period of time. It's always going to work in their favour. And you can demystify it for providers and say it's not that complicated because the resources are there. To have people come out and talk to them, and Ronan was talking about how COVID has actually opened people's eyes to the remote working and how flexible people can be in those. So there's no excuse for this sector to be covered in mist, because it's very easy to reach out to various individuals, various organisations like Money, Cube or Zurich, and they'll give that lending hand. The experts are there.
And Regina?
Yeah, more or less the same thing. The experts are there, but also that there's flexibility, that there is flexibility there around it. I think that's really important, because that would have been one of the things that I would have been hearing you get involved and then you're stuck in it and you can't change from whatever. So flexibility is really, really important. And I think that, the whole openness around it, that, raising that awareness that they can go and talk. And I think it would be that relationship, I think, would be really important. That you have a relationship officer, or somebody that you can ring up at the end of the phone if I have a question and that I am unclear about, that me as a provider, I don't always have to have those answers. I think that's really important. And it's just the whole raising, that there are options there. I think that's really important. If people don't want to go down the pension, know that there are other options I as an employer can look at to show my appreciation of those staff who might decide that that's not what they want to do. I think that those things are really important. So thanks for that.
So Ronan, I'll give you the last word if I can, and I just want to, what would you say, just finally, to say what is the next step that somebody should take after listening here, after raising their awareness on pensions? What is the one step that you would advise?
Is giving yourself, blocking an hour out in your diary. Just block an hour out in your diary, whether it's a Monday to Friday or if it's a Saturday or Sunday, and just finding the time to just maybe do a little tiny bit of research and to find somebody you're comfortable to speak to. So whether it's talking to Blonnie, whether it's contacting Zurich, whether it's finding a relationship that you have with your own advisor and just saying, I want to speak to you about doing something for my staff, or I want to talk to you about doing something now. You don't need to do any more research than that. Just engage with somebody and let them do all the heavy lifting. And I think, Regina, you talking about finding somebody who can take all that pressure off you, particularly if your staff are coming to you, asking you questions. that becomes a barrier. You don't want that. You want to be able to say, no, speak to such and such. And if you can get that relationship in place, everything else will take care of itself.
Okay, thank you. So all that's left is for myself to thank you, to my panels, to Dara, to Regina, to Blonnie and to Ronan. I want to thank moneycube.ie and CSI and IBEC for facilitating this and for running Pensions Awareness Week. And lastly, I'd like to thank you for making the time to taking that first step, and it'll be rewarding and you won't regret it. So thank you.